Hey guys, it's Sasha. The hype around AI exploded this week as OpenAI released Sora 2, its latest video generation tool. Tech bros and AI fans began dribbling all over their keyboards as they sang praises on Twitter. I tried to download and try the app out, but it is apparently not available outside the United States, so I had to rely on the experiences of people who have appeared to be able to actually try it out. And distilling through the social media, it appears that although there are definite improvements, the story seems to be much the same as it was before. To get one short, usable-ish clip, you typically have to go through at least dozens and dozens of completely unusable clips with major errors in them. Here you can see a couple of typical examples that I saw on Twitter. First, there's a skateboarder who seems to grow arms while performing about a dozen shoulder dislocations in mid-air, and then a boxing video with the typical signs of AI slop with breaks in continuity, weird morphing, just doesn't look at all right. And as per usual, there is no way to edit existing clips. That is not coming for some time. For example, making a very small alteration to an already generated video. Maybe there's one little detail that you want to change. No, instead you have to change the prompt that you put in and hope that the next video, which will be completely different to the previous attempt, is good enough and doesn't have issues. It appears that the videos that come out are a lot better if the type of video that you want can rely on very similar pre-existing videos being out there already that were used by OpenAI in the training dataset for the model. So if you just want to blatantly plagiarize or copy something that's already been done and just with slight tweaks, then your chances of the video not looking completely broken increase. And naturally enough, this opened up the usual contest on Twitter between people who want to defend the rights of copyright holders, people who have produced the original content for which OpenAI does not pay them money but then uses, people whose work has been outright stolen in order to train the AI model so that it can then spit out near identical output for commercial gain. And by the way, I was just reading just before recording that apparently in the first few days OpenAI is already restricting your ability to generate videos with some characters, especially Nintendo-based characters, because apparently Nintendo really likes suing people. But obviously for smaller creators, you can just go and get fucked, right? Nobody cares about you. They'll just steal your stuff and let the AI model train on it because you will never have enough dollars to sue them. Tech bros on the other side I'm busy shouting very loudly that copyright law is for boomers. AI companies are allowed to do whatever they want, of course, and completely ignore the law because it's the future, bro. Although a number of lawsuits have already been launched against OpenAI and other AI companies by the likes of New York Times, a bunch of other ones, the progress of these lawsuits seems extremely, unusually slow. And there seems to be a complete lack of interest in any of this from the government, including the Congress and the Senate. They don't want to do anything about this, even though it is so brazen, which of course is very important to remember. Very important. Has nothing, absolutely nothing to do with the fact that all of these politicians stand to benefit financially, personally, from these AI companies seeing their valuations go to the moon, because they were lobbied by those companies. The politicians were lobbied to look the other way. Anyway, a few days ago, we found out that OpenAI made $4.3 billion worth of revenue in the first half of 2025. That's a roughly 130% increase on the revenue run rate that they had in 2024, which is very impressive. The growth in revenues is doing really well. New people are signing up, but at the same time, they are still continuing to lose eye-watering amounts of money. While they made the $4.3 billion worth of revenue, they then also spent $6.7 billion on research and development, another $2.5 billion on inference, apparently, and another $2 billion on sales and marketing, which means that overall they lost almost $7 billion while taking in $4.3 billion from its customers. And that's before accounting for CapEx spend, which is probably dwarfing all of the other costs put together, because the billions upon billions of dollars that are being spent on building out the data centers and the Nvidia graphics cards that go into those data centers comes on top of these costs. But the cost of buying graphics cards, building all of these giant data centers, just gets amortized over long periods of time, even though the likelihood is that these graphics cards will get replaced over a much shorter period of time as new ones come out and as they just break and stop being as valuable. So in 2025, before accounting for the cost of all of this capex, the graphics cards, which probably makes the cost of inference significantly higher than the published numbers, OpenAI spent $2.60 for every $1 in revenue. In 2024, using the same data that was shared with shareholders, OpenAI apparently only spent $2.34 per $1 of revenue. So the gap between what OpenAI spends and how much money it makes is actually currently growing instead of getting smaller. And according to inputs from other companies, it is the same story with others as well. Economies of scale are not applying here because there is a physical cost to generating the extra amount of compute required to process queries in newer models like GPT-5. And a big reason here is that the models are getting progressively better because the algorithm just uses more and more compute. It chucks more and more compute at every query instead of the efficiency of that compute increasing. So each time you submit a query to OpenAI, it then generates a whole bunch of internal subqueries so that the model has a chance to structure its answer. You know, when it says thinking, it's doing all of those subqueries. It has a chance to self-correct, to double check things, to make sure that the answer is exactly what the user is asking for, etc., before it spits the answer back to the user. And this approach costs a lot of money. And every time a new model comes out, it does more and more of this other stuff, which costs even more money. And each time that the model gets better, the cost, therefore, of running that model jumps as well. But as everyone was busy looking at Sora 2, OpenAI quietly closed another funding round 2 days ago. OpenAI sold $6.6 billion of shares to select investors and employees, valuing the company at $500 billion. They apparently authorized up to $10 billion worth, but only sold about 2/3 of that. If OpenAI was a public company, this valuation would place them just above ExxonMobil and Netflix as the 19th largest company by market capitalization in the world. Just for comparison, in the first half of this year, Netflix made $21.5 billion worth of revenue, exactly 5 times as much as OpenAI, and Netflix has a net margin of 28%, which means that their net profit is, well, positive and growing instead of minus 130% and going lower. OpenAI says that they have $17.5 billion worth of cash as of the end of the first half of the year. And at the rate of capex and general cash burn, they will probably need to do more funding rounds in the next 12 months, 24 months, and so on. And this is precisely where this story about AI hype gets seriously weird and interesting. But just before I dive into this bit, trust me, it's crazy. I wanted to briefly mention that my Investor Playbook course is on sale right now, today and tomorrow only. If you're watching this later than that, I'm sorry, you'll have to wait for another opportunity. The course is all about analytical investing. It teaches everything from technical investing knowledge, all the jargon, a full breakdown of how to read financial statements in a lot of detail. There's literally many hours, multiple hours of content just on that alone. And then the course covers how to build valuation models, good practices, investing tactics, and a lot more. You only pay a one-off fee to join. There's no monthly subscription, but then you get access to all the new content as it comes for free. I am expanding the course. I have some big plans for the next couple of months. And you get to join live sessions with me where you can ask me questions. You can listen to a deep dive on a different topic every week. And if you can't join the live session, you can always watch those later as they get recorded. If you want to sign up, make sure you use the code FLASH10 at the checkout to get your 10% discount. That's only available today and tomorrow only. And thank you so much in advance. I really look forward to seeing you in the live sessions, including next week. So here is the bit that I found really interesting about OpenAI. Just a few days ago, Nvidia announced that they will invest $100 billion into OpenAI. On September 22nd, 2025, Nvidia announced its $100 billion investment in OpenAI to build 10 gigawatt of AI data centers, a scale that would require 4 to 5 million GPUs, nearly double of Nvidia's annual output. So here is the way this works. Early investors go and give a bunch of money to OpenAI in funding. OpenAI then goes and hands over that money to Nvidia to buy a bunch of graphics cards because that's their business model. They use those graphics cards. Those graphics cards are currently selling at 4 to 5 times the price that they were before the AI boom started, but it still costs Nvidia the same amount of money to produce them. So Nvidia sits there printing cash. They make a giant boatload of money. Nvidia's balance sheet explodes. Their current assets go from $16 billion to $102 billion in just 4 years. But wait. Even after that meteoric rise, Nvidia still doesn't have $100 billion to invest in OpenAI. Their total amount of cash and cash equivalents and short-term investments is $57 billion in their most recent filing. So what's happened here? Well, it's a circular game. Imagine you have this imaginary, completely non-real company called Company O. Company O wants to raise their valuation so that the founders can make a ton of money by cashing in and selling their shares. Their valuation is based on hype and essentially a multiple of the amount of capex investment that they make. The bigger the data centers, the more graphics cards are in there, the more their shares are worth. And you can see how huge these data centers are getting. OpenAI is already using more energy than entire countries like Slovenia, and the energy usage is only going up in a vertical line. But we're of course not talking about OpenAI. We're talking about this completely imaginary company called Company O. So Company O loses a lot of money. The amount of money they lose goes up over time, per user, per dollar that they make. And the company doesn't have enough cash to keep buying millions of graphics cards to stick into all those data centers that they're building. So the boss of Company O goes and has a little chat with the boss of Company N that makes the graphics cards. And they say, look, we don't have enough cash to keep buying your cards, and we're not expecting to have the cash in the next few years, if ever. So how about we do a bit of collusion? And we give you shares in our company in exchange for an investment of $100 billion. We know that you don't have $100 billion, but check this. You give us just $1 billion to get us started. We take it, and then we give you the $1 billion right back to buy the graphics cards. You then take the $1 billion that we just gave you, and you give it back to us again. The second billion. And we just rinse and repeat this 100 times over and over until the total investment is 100 billion. In the end, shares of Company O are going to go absolutely through the roof because we're going to have the biggest data center stuffed with millions of Company N's graphics cards. And then Company N can sell those shares of Company O that would make way more money for them than by just selling the graphics cards in the first place. That's basically roughly what's happening here. Nvidia is now not only selling the picks to the people going up the mountain in search for gold, but they figured out a way of also making a load of money from the Klondike hype itself as well. Good for them. And if you thought that it's really beginning to take the piss, just listen to the most recent Jeff Bezos interview from 2 days ago.
One of the things that's going to happen in the next, it's hard to know exactly when, it's 10 plus years, but I bet it's not more than 20 years, we're going to start building these giant gigawatt data centers in space. So these giant training clusters, those will be better built in space because we have solar power there 24/7, and the solar power there are no clouds and no rain, no weather. So you can build. We will be able to beat the cost of terrestrial data centers in space in the next couple of decades.
So according to Jeff Bezos, in the next few years, companies will be building out entire data centers, like huge, vast buildings with millions of graphics cards in them, in space, because you get solar power 24/7 there. This of course makes complete sense and is in no way completely fucking delusional. The fact that you can use energy storage, nuclear power, other forms of power such as wind or tidal for a fraction of the price that it would cost to lift all of the stuff you need into orbit and then keep it in orbit, that fact is just irrelevant. If you ever wonder if there is a bubble happening at any point in time, if you hear leaders in the space not only continuously generating hype, because that's generally what they do, but also making these types of statements that are just clearly insanely stupid. And when you hear at the same time large volumes of fanboys amplifying this and clapping wildly when they hear this bullshit, that's a pretty surefire way of knowing that you're entering some kind of peak hype territory. The problem with stating the obvious, as I am right here, is that you inevitably attract the tech bro crowd. Just go and read the comments, who will loudly complain that you don't know what you're talking about, you don't understand the future, it's the technology, man. In fact, I am a really big fan of AI technology. I use it every day, just like I was a big fan and an active user of the internet during the .com crash. And at the same time as being a fan, I could also appreciate that the company valuations and the hype around those valuations was complete nonsense. The two can happen at the same time. As more people are posting clips of short videos generated by Sora, that one good clip that they generated after generating hundreds of unusable clips, the cost of generating these clips is only going up. And there is a weird take from everyone that soon there is going to be entire movies created by AI. I think we're nowhere close, but soon is happening. It's happening soon. And we will all want to watch these movies, apparently, because you'll just be able to watch exactly what you want. And we will want to go and look at art generated by AI. And we will want to listen to music generated by AI. But here is an interesting, thought-provoking example for you. Chess AI is complex, but way simpler than things like generating a video. So chess AI has basically been solved. It's been here a lot longer, it happened a lot earlier, it became better than humans at playing chess somewhere around 20 years ago, and today it's not even remotely close. On every online chess platform, there are chess bots that you can play against. There are chess bots for different skill levels, for different types of games, chess bots that imitate the style of famous chess players, or even famous non-chess personalities, just celebrities, and you can play against them whenever you want. You don't have to wait for them to move, you don't wait to have to be matched to another player, you can take as long as you need, they won't drop out of games, they won't act like a dick to you because they are a bot, they will always say nice things. And you know what? Absolutely nobody plays bots. There are millions of people who play chess online. None of them want to play bots. All of the humans on these platforms prefer playing other imperfect humans because humans like and enjoy and seek out the raw imperfection and the random nature of how the human mind works. They enjoy interacting with a real human at the other end, even if there is almost no visual difference in terms of how the chess game online looks on your screen. I think about this a lot. These new generations of AI are going to be absolutely revolutionary in increasing the productivity of humans. A good developer can produce much higher volumes of code at a higher quality than before using AI. A CGI artist will probably be able to do a lot more good work in a shorter space of time by incorporating AI in their workflow. It's like the personal computer and the smartphone revolution all over again. But it can also be true at the same exact time as acknowledging this, that the hype around the technology far surpasses even these very lofty benefits that are definitely coming. And the valuations of companies in this space can also be in a massive bubble, even though long-term, AI is here to stay, it will be here for decades, and it will benefit all of us long term. The S&P 500 is once again at all-time highs thanks to this ongoing, growing AI hype wave. The Shiller PE ratio has just broken 40 for only the second time in history. The only previous time being just before the .com crash happened. Investors, the majority of whom have only ever seen bull markets and have never seen an actual stock market crash, the 2 months in 2020 doesn't count, the last one happened in 2008, are tripping over each other. These investors are just wanting to invest in loss-making companies at increasingly absurd valuations. It will be very interesting to see how all of this unravels. Stay tuned. I will be here to share my thoughts, unfiltered, on everything to do with the economy and with the stock market. I know I've been busy over the last few months. Sorry, I will make more content. Remember, my course is on sale until midnight tomorrow, Sunday, midnight New York time. If you want to get live weekly sessions where you can ask me any questions that you want or suggest topics for deeper dives. If you want to understand more about how to do analysis, how to build valuation models, how to look at companies as an analyst, investing strategy in the good times and the bad, you can get 10% off my Investor Playbook course. Use the code FLASH10 to get 10% discount. Only available today and tomorrow. And thank you to those of you signing up. It means a lot. I really do appreciate it. And I will see you in the next live session next Thursday.